Funding for Market Journal is provided by the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Chad Hart talks about the outlook for acres in 2018. Gregg Ibendahl reviews the USDA's latest farm income forecast. Keith Glewen outlines the 2017 Soybean Day and Machinery Expo, and Jessica Spreitzer describes foreign demand for American pork and beef. Iowa State Extension economist Chad Hart is our corn and soybean market analyst this week. This year, American farmers grew a record soybean crop and the second largest corn crop ever. The U.S. Department of Agriculture's long-run projections, released Tuesday, show 2018's output could be even bigger. The agency forecasted 91 million acres of corn and soybeans, both slight increases from 2017. While the estimates are early and subject to change, we started our conversation with Chad Thursday morning by asking about the economics of corn and soybeans going into the next growing season.
Going into 2018, it's been a bit of a struggle. When you look at 2017, we had better prices at the beginning of the year, but once we figured out how big these crops were, we've watched those prices fall. Returns tail off as well, and so as farmers head into the winter season here, they're staring at some significantly lower prices, wider basis than they would usually like to see here, and so that's put the screws on the economic returns for corn and soybeans. But looking forward into 18, the issue is that other crops are still struggling as well, and so we're likely going to see acreage hang around in corn and soybean production as we go into next year.
Do you think that farmers will ramp up soybeans even further?
I'm hearing a lot of chatter about that. In fact, I just got back from a trip to North Dakota talking with farmers up there, and we've watched them expand soybean production greatly up in especially the northern Great Plains, and in talking with producers, they're looking to add a few more acres as we go into 2018 in soybeans. And so, yeah, I do see that pressure continuing to build there.
Well, let's talk about prices, and specifically when it comes to corn. Why have prices remained so low for so long?
It goes back to that productivity. When you look back at the last 5 corn years, we've had the 5 largest corn crops this country's ever seen. And so we've had incredible productivity. And what's happened here is we've got really good demand for corn, but we've had incredible supplies the last 5 years. And those have basically overwhelmed that demand and held prices down.
Do you think there's a point where speculators become too short and we can see some short covering, or a point where prices get so low that they see value?
Both of those could happen. In fact, when you look here, what we've been finding is, especially as corns approach that 330 to 340 range on a futures board, that seems to be the price that either spurs on some of the little additional demand or brings those speculators into the marketplace to play. And so we've been finding those support levels. We found them last year. We're finding them again this year. There just seems to be that level as we get into the lower 3s where the market's like, you know what, that demand is still very strong. Let's support the price at that level.
Well, when we last talked, we'd asked about your crop condition ratings and the tracking of how that correlated with final yields. How did it end up from your analysis?
From our analysis, what we found is that while the crop did struggle through some times, especially early in the year, what we saw was as the year went on, that crop looked better. We had a great grain fill period across most of the upper Midwest. And also farmers were telling USDA through the season, this crop is better than we were expecting when we started out. And so when we look here, I think it was a case of, USDA, the traders, and even farmers catching up to how good this crop turned out to be.
Do you think there will be big adjustments in January?
I don't expect big adjustments. You're already talking about a yield record here as far as the nationwide yield is concerned. And so I'm looking for slight adjustments here. This crop, like I say, USDA made a big adjustment here in November. I'm expecting January to just sort of confirm what we found in November.
Can you describe just how low basis levels have been?
Sure. You know, as you're looking at basis levels here, the idea is those big crops have led to more and more being stored on farm throughout the year. And when you have a lot of crop in the local area, that tends to create a wide basis. Those prices get a little lower. And that's what's been happening over the past couple of years. And so we have seen basis levels. They eroded in 16. They've stayed down here in 17 because of the very large supplies. And that's going to be a problem as we look forward in 18. We're carrying a lot of both corn and soybeans forward into the new year. That's going to help maintain the wide basis levels we see today.
With that in mind, where do you think selling opportunities exist?
Well, as we look out for selling opportunities, I think farmers are going to have to bust that cash price apart. We're going to need to look at where can we take advantage of some improvement on the future side and catch that basis improving when we can. I think a lot of farmers are looking into the late spring, early summertime. If you think back over the last couple of years, we've had that seasonal rally in the late spring, early summer, usually tied to a weather rally. That's offered some really good opportunities for farmers to price their crops.
Do you think South America will have a big impact this year?
South America will. I mean, right now, we've got through our harvest, we're concentrating on the weather down there, what's the planting progress. And when I look at the, let's call it the market dynamics of both crops, the idea is the markets are waiting for supplies to slow down from somewhere. And so the next place where that could happen is South America. If they do have some weather problems there, that could help create some momentum going into 18 for some higher prices and hopefully add on to that potential weather rally that we would see late spring 2018.
Do exports need to improve, though, in order for a rally of any kind to happen?
They do, but they would be tied to that South American weather. If we see problems starting to occur down there, that tends to spur on our export demand. That's what helped us actually a couple of years ago. If you think back when they started to have some flooding problems in Argentina, that got the export markets a little worried. We did see a little additional buying of U.S. soybeans contra-seasonally at that time. We could see that same sort of thing develop here.
Next week, Mississippi State Extension livestock economist Josh Maples will join us to look at cattle markets. The U.S. Department of Agriculture believes larger cash receipts will help net farm income bounce slightly higher this year. The USDA's latest forecast, released Wednesday, projected 2017 net farm income at $63.2 billion, nearly in line with the agency's previous estimate in August. November's numbers predict receipts from animal sales will increase almost 8%, but those from crops will fall 2%. Kansas State University's Gregg Ibendahl joined us Wednesday afternoon to review the latest estimates. We started by asking if the overall net farm income projection strengthens the idea the industry reached a bottom.
Gee, that's a really good question. I would like to hope it's the bottom. I mean, if you look at like a 20-year history of net farm income, you know, there's been a couple of years where we kind of touched along these levels here. We haven't really gone down much below that. And if you look at the average, we're certainly well below that. So I'm hoping it's the bottom, although I can't imagine grain prices going any lower, but you never know. You know, the one thing that's been kind of holding us, keeping us somewhat in good shape has been the input prices. So, you know, there's a chance they could go up a little bit for next year. But, you know, as far as the revenue side, I really hope we are at the bottom for that.
I'll go further into that. What aspects do you see have improved and are helping?
I mean, as far as the revenue side? Mm-hmm. Well, if you look at it by crops, I mean, from the crop side of things, I don't think we've seen much improvement at all, unless you're a cotton producer. And we do have some cotton production here in Kansas now. It's becoming a bigger crop here all the time. But as far as, you know, our big crops, corn, soybeans, grain, sorghum, and wheat, I mean, those prices really haven't improved much at all. So we haven't really seen much revenue increase there at all. Now, on the livestock side, I think this year's probably turned out to be a little more of a surprise than what we thought. You know, prices have actually remained steady and have kind of gone up the second half of the year. So livestock revenue, you know, doesn't look really too bad. I mean, it's not, well, at least compared to last year anyway. So the revenue side for livestock producers does look pretty good this year.
After ticking upward the last few years, debt to asset and debt to equity ratios are projected to hold steady this year. Would that hold consistent with what you've seen in Kansas?
Yeah, I think so. If you listen to the USDA report this morning, they were saying that equity was going to be up about 2 or 3%, and they were attributing that to higher land values. I'm not really sure that's the case here in Kansas because I'm not really sure we've seen the bottom yet for land prices yet. So, if our land prices are holding steady, maybe going down a little bit, I think our debt to asset ratios are probably maybe increasing a little bit more. The other issue with those ratios that you talked about is that the debt to asset ratio especially is a trailing indicator. So I would not expect to see that really rise until we've been in a really bad farm crisis for a couple of years. You go back and look at the 1980s and the debt to asset ratio really didn't start to rise until we were well into the farm crisis.
I think the last time we talked, you said the delinquency rate was another trailing indicator. What are those rates, that rate, the repayment rates, what do those look like?
Yeah, they're starting to bump up just a touch, but historically they look really good. So yeah, from that side of things, we look like we're in really good shape. But again, that won't really start to rise until things get really bad for a couple of years.
So do you think producers have eaten away at some of the profits they gained a few years ago, those larger income years that they had?
Well, what they've been doing was, and some of our evidence with our KFMA program here in Kansas would show that, is that producers tend to take those good years and take those profits, actually invested it back in machinery. So during those years where we had some really good net farm incomes, we saw a lot of farms here in Kansas really crank up the amount of machinery that they have on their farms, which actually tends to be a pretty good farm management strategy as far as machinery management, because now with farm profitability being low, these producers can tap into that machinery and not have to spend a whole lot of machinery here for the next couple of years.
To what effect has health insurance become a large category of spending on the farm?
Yeah, we're lucky we keep track of that data here at Kansas, so we have data going back pretty far for farms who do decide to give us their individual information like that. So we have information for health insurance. It has basically doubled over the last 20 years. It is now probably our second or third biggest category as far as expense items are concerned.
And do you think that it keeps increasing?
Yeah, especially, if you look at what happened since 2007, it was going up before that, but that rate even went up even quicker since then. It's been pretty steady here, and I don't see any sign that health insurance rate is going to go down any. So that's becoming a major problem for a lot of farms.
As far as the data that the USDA tracks, what costs do you think still need to retreat in order for profitability to return?
Well, again, I think a lot of these things could be solved by having higher grain prices, and like some of my colleagues say, a good drought somewhere in the part of the world will do wonders to help grain prices. So something like that would help. As far as the expense side is concerned, I think 2016 going into 2017. I think we've kind of reached the bottom as far as input prices. You look at what fuel price has been, what fertilizer price has been, those have all been pretty low from when you look at a 10-year perspective here. And we're seeing some evidence now that, fuel prices may be going up higher here. So I expect to see some increases, maybe a little bit in fuel and for fertilizer for next year. So I don't think we're going to get much relief on the expense side. Again, it's going to take some changes on the revenue side, especially higher grain prices for these grain guys to see some better profitability.
What have you been advising producers to think about during the off-season for the cropping guys and into the 2018 season for the livestock guys?
Well, if you go back and compare this farm crisis with the previous one, I think both of them you can break down into really a crisis of cash management here. So I think a lot of producers can survive some periods of low profitability. It's just making sure you have enough cash to get by, because obviously net farm income is not providing all the cash by itself here. So you guys really need to watch out for how much you're spending. Watch that family living. We're still seeing, recreation is one of our top household expense items. So farmers need to watch that, and certainly, on the machinery side, hold off buying machinery as long as they can, because that's where a lot of our cash ends up going in a lot of years.
The USDA will release its first farm income projections for 2018 in February. The 2017 Nebraska Soybean Day and Machinery Expo is Thursday, December 14th at the Saunders County Fairgrounds in Wahoo. This year's event features topics on marketing and weed control, with a discussion on dicamba injury during the past growing season. Nebraska Extension's Keith Glewen outlines the expo.
The Soybean Day and Machinery Expo is a great opportunity for growers to learn more about some of the important topics associated with production, marketing, and management of soybeans. And with us this year we have Michael Swanson, who is Vice President and also Ag Economist for Wells Fargo from Minneapolis, Minnesota. He's going to talk about the metrics associated with growing soybeans. Then by popular demand, we have Jason Norsworthy back, and Jason's with the University of Arkansas and well known for his work with dicamba. And he's going to share with us some of his research from 2017 growing season. And then finally, Chris Proctor, who's our extension weed scientist here at the University of Nebraska, has a very interesting demonstration on measuring devices associated with herbicides, pesticides, and this is something growers will be able to take home and put to use right away in their farming operation.
The Nebraska Soybean Day and Machinery Expo begins at 9 a.m. and includes a noon lunch. The event is free to attend. However, the Saunders County Soybean Growers Organization encourages attendees bring a can of non-perishable food for donation. The December Nebraska Farmer says opportunities are growing in the state for identity preserved products. Identity preserved crops are typically grown for a specific end use and kept separate from other grains. This month's magazine says agribusinesses, including Gavilon and Bunge, accept non-GMO corn and soybeans, and Dannon requires local dairies use non-GMO feed. In December's issue, you can read more about the growth in food-grade corn, seed corn, and popcorn in Nebraska. So far, 2017 has been a strong year for American pork and beef exports. Through the first 9 months of the year, shipments of U.S. pork were on pace to set a new record. Beef and veal exports were only slightly behind the top set in 2011. The U.S. Department of Agriculture expects about 11% of the nation's beef and veal production will be exported this year, along with 22% of the country's pork output. The top destinations for both meats are typically in Mexico, Japan, Canada, and South Korea. We recently talked with Jessica Spreitzer from the U.S. Meat Export Federation to discuss those markets, along with emerging buyers in South America and the Southeast Asian or ASEAN region.
So 2017 has been a great year for both beef and pork. To start with beef, we're seeing just double-digit growth, especially in chilled beef exports. We're seeing growth across the board, but the main growth is coming in Japan, and then also strong growth in Korea and Taiwan, and some emerging growth in the ASEAN region as well. So our exports are up significantly over last year, up 9% through September. For pork, it's a similar story. We're seeing growth as well, but again, across the board, it's suffered a little bit of the slowdown to China and Hong Kong, but the main increase is to Mexico, so that's really driving the volume increase there.
Why is Japan such a strong market for U.S. beef?
So Japan has seen increasing beef consumption this year after a little bit lower beef consumption levels for the last few years. But this year we're seeing a big growth in retail sales, but most of the growth is being driven by consumer food service, and so that's an area where the U.S. high quality product can really shine. We have a lot of established relationships with food service customers there. So we're seeing really strong growth in items like short plates that are going for the beef bowl restaurants, and then other items like more grilling type items or tongues going to yakiniku grilling style. So we're seeing growth across the board there.
Is there a danger in that market with the amount of market access, the benefit of market access that Australia has?
Yeah, so there is a little bit of a worry in Japan because we are being left behind by our competitors on their duty levels. So the only competitor, the main competitor that has a free trade agreement right now with Japan is Australia. And through that, they do have preferential duty rates compared to the U.S. on both chilled and frozen beef. Mexico also has a free trade agreement, but they're a smaller supplier. Our worry is going forward with TPP now that the 11 remaining countries are moving ahead without the U.S. All of those benefits that the U.S. worked to negotiate will now go to these other countries. So our competitors like Australia, New Zealand, Canada, and Mexico will now all have preferential duty rates compared to the U.S.
Let's stay in Asia with South Korea, which has been a good market for both beef and pork. Why?
Yes, so we're seeing just increasing rates of consumption for both beef and pork in Korea. Their growth in consumption just for beef over the last 10 years is like 44%. So just skyrocketing growth. And they're becoming really big meat eaters. So there's a switch, and this has been more long-term, but it's a switch from rice and grains to more poultry, beef, and pork. So the U.S. is benefiting from that as one of the main suppliers, especially for chilled beef to Korea.
Specifically with pork to Mexico, Mexico has been an incredibly strong market for the U.S. Which cuts are doing well there?
So hams are the main cut that goes to Mexico, and Mexico is on pace to set a 6th record year for U.S. pork exports. So we've just seen just increasing volumes there and just huge growth. That is being driven by consumption that can't be met with growing production. So the U.S. has been filling that gap. And then also Mexico is a very important market for variety meats as well for pork.
Is the renegotiation or withdrawal of NAFTA a legitimate threat for U.S. pork exports? Does Mexico have other options?
Yeah, so we really want to do no harm with where NAFTA is right now for U.S. pork and also for beef. But the volumes going to Mexico compared to our total exports, it makes up a significant amount of volume. So we are worried about Mexico looking to diversify. They are doing that with, not just beef and pork, but also all of their agricultural products. So they are taking this as a threat. We want to assure them and also place the pressure here that we need to remind everyone how important NAFTA really is for U.S. beef and pork exports so that we don't have any hiccups in our top volume market for U.S. pork.
Their options for other buyers or other suppliers would be who?
Well, they're working right now on a modernization of their free trade agreement with the EU, so that's something that could be a threat. Canada would be the other main supplier to them right now for pork. That's the top supplier after the U.S.
One of the disappointing markets for U.S. pork exports is China. Why is China down, and is there a way that U.S. exports can rebound there?
So with China, we have seen a slowdown this year, and it's not just from the U.S., it's with all suppliers, but of course the EU has really dominated in China so far. That's because China's production is very cyclical, so production has increased again this year. The huge increase in volumes last year was when they were short on production. But even though the muscle cut volumes have slowed a little bit this year, we are seeing growth in variety meats still. So pork exports to China and Hong Kong for variety meats have been very strong, and they're higher than last year. And actually the value is increasing even more than the volume. So the value per head for each commercial hog slaughtered in the U.S. is up to $6 just from variety meat exports to China and Hong Kong, and that's up a whole $1 from the same period last year.
In either pork or beef, what emerging markets do you think are noteworthy?
So to start with beef, South Africa has been a great market for U.S. beef exports so far this year. The market opened to U.S. beef last year, and since then it has become the 2nd largest destination for U.S. exports of beef livers. And this has come at a time when Egypt, the top destination for beef livers, has slowed. So this has helped offset kind of the loss in Egypt with their currency issues and provided another outlet for those larger volumes of U.S. beef liver imports. So that's been really successful for us. And in addition, on beef, we're seeing growth in the ASEAN region as well. A lot of demand in the Philippines for high-quality U.S. beef, in food service and retail, also demand in Indonesia and Vietnam. And then looking at Brazil is another new market. That's another market where we have opportunities on livers. But the main item that they demand is picanhas, which would be culottes. So we also have opportunities there for culottes and middle meats as well. And then shifting to the pork side, Colombia would be one of our main standout markets this year. That is one of the larger markets for U.S. pork exports, but growth has been huge this year. Also to Chile, where we've seen both on pace to set a new record for imports from the U.S. this year. And Colombian consumers are choosing to eat more and more pork. They're shifting to pork as an affordable protein. So as their consumption rapidly expands, they have a lot of product that needs to be filled with imports as their production can't keep pace. So we're really benefiting from that along with our FTA in Colombia.
Now with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here again for the weekly forecast, and of course I hope you had a great holiday weekend. We sure had the nice temperatures, a little bit windy, but who cares when it's in the 70s as you're approaching the end of November. Now, we paid for that a little bit this last week as we've seen a couple systems move across during the midweek period that cooled our temperatures down about 20 degrees, but hey, we were still close to normal. Now as we go forward in time, it looks like we do have some fairly Arctic air moving into our region as we go through the middle of next week, and that should create a fairly substantial weather maker for at least the eastern 1/3 of the United States, and the potential is that it's stayed to the south of us, sparing us some accumulating snowfall. But if this system lifts a little bit to the north, conditions may be changed quite rapidly. So keep an eye on the weather. Things at this time of the year do change off a dime, and snowfall out of the forecast one day all of a sudden comes back in the forecast the next day. So here we go with the upper air models, and as we look at today, here's that trough coming into the Pacific Northwest. In front of it we have ridging over the Central Plains. That's going to pump up some warm air into our region, so we're going to see a little bit of a respite in terms of the 50s and possibly breaching into the 60s. as we go through this weekend. Low pressure at the surface down in Texas, too far to the southwest to really bring up Gulf moisture in our region, so most of the activity remains in the Pacific Northwest. By Sunday, it starts to see this trough starting to pull into the Great Basin region. There's a series of low pressure systems shown at the surface in terms of the forecast, but these are all working on very dry air. There is just nothing in order to feed any precipitation in our region, so all the activity will remain to our northwest over the northern Rockies. And then on Monday, this trough digs even closer to us. Start to see surface low forming in the Texas Panhandle. That's going to kind of slide eastward according to the models, and that will bring the precipitation much farther to the east, but there is showing some precipitation along the front range of the Rockies passing the Panhandle. And then on Tuesday, the trough passes and we get some very cold air on the backside of it. The surface high pulls in. We'll be looking at temperatures falling throughout the day. Low pressure system remains over the southern United States, and that's really going to feed some very exceptional moisture up into the Ohio River Valley and Great Lakes. On Wednesday, we still stay in a northerly flow straight coming out of Canada. Surface low is showing here over northwestern Missouri, but that looks like it's going to basically stay well to our east, pumping the moisture and all of the inclement weather well to the east of us as we stay under the influence of high pressure. On Thursday, another piece of energy looks like it's going to drop along the backside of this trough, potentially generating a little bit of light snowfall as a surface low also at the surface begins to slide toward the south and east. And we can see some of that precipitation breaking on the totas. This is 2 inches or greater totals, but I wouldn't be surprised to see some accumulating snowfall here in Nebraska. And then on Friday, a reinforcing shot of cold air. Another high pressure system moves down into our region that keeps the cold air in place. So we're going to be looking at several days that we'll be lucky to break the 35-degree range, and possibility of some more accumulation of snow, particularly across northern Nebraska on Friday. 8 to 14-day forecast keeps the very cold conditions in place from central Nebraska eastward. And in terms of precipitation, with that northerly flow, not a lot of moisture associated with it, so dry conditions, basically west coast all the way to the east coast.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, net farm income, and U.S. meat exports. As always, you can keep up with Market Journal during the week by following us on Twitter, Facebook, and Instagram. Next week, Josh Maples will be our cattle market analyst, and Scott Irwin from the University of Illinois will talk about crop price cycles. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.